need a double. All right. Well, thank you so much for joining today. Today, we have a very special guest, our mortgage broker that we use a lot. A lot of our clients, if you're seeing a familiar face, it's the man behind a lot of our approvals and transactions going the right way. I'd like to introduce to you Marc Andre Alexander. So thank you so much for joining us, our mortgage broker with Smart Debt Mortgages. So why don't you go ahead and introduce yourself a little bit and tell us a little bit about you, Marc.
Okay, so thank you so much for inviting me. It's a pleasure. I'm a mortgage broker with Smart Debt Mortgages. I'm in the field for the past 3 years. Previously to that, I have a lot of background into finance. And the reason why I came into mortgage brokering was to help client to basically find the best deal for them and to give them the best service. I had prior experience with other mortgage broker where basically they were not responsive, or I had to do my own research to find the best rate. So basically I came into brokering to offer the best service to the client and find the best rate for them.
Awesome. Well, thank you so much for coming in today. I really appreciate it. I know you're really busy with everything that you do, and there's so many files. So let's just get right into it. So, Marc, first and foremost, we want to know, what is the current rate? What's the best rate right now that, our viewers should be looking at? And, obviously we're in Canada, Ontario. So what is it that, what is that rate where's the rate at this point?
Okay. So the best rate right now are basically, for the 3 years, you're looking at 3.87.
Mm-hmm.
And then 5 years, you're looking at around 3.89. This is for insured mortgages. So it's if you put the less than 20% down payment, then that are the best rate available.
Okay.
Often,
really?
Yeah. So often people will bring up what if I bring 20%? Isn't it I get a better rate because I put more down payment? And the reality is not. Basically, when you put 20%, it's a non-insured mortgage, so it represents a bigger risk for the bank. So because of
that makes a lot of sense.
Higher.
Nice. Okay. Yeah, that's true. A lot of people think that, if you put in more than 20%, then it's actually better because the bank is hey, we have less money to give you. But it's because it creates more risk to the bank. So that's a really, really good point. Okay, perfect. Can you maybe share with us what are some of the key trends you're noticing with buyers right now? Right now in the marketplace, are you seeing that what is it that buyers are doing? Are buyers first of all, are there more buyers coming in the market? Are there more, do you get more inquiries about that? What are the trends that you're noticing yourself?
Yeah, so basically in terms of trend, I see renew activities. I would say 2023 was very slow, and last year it started picking up. But this year, all the the demand that people were waiting, I was calling them and they're oh, I'm not ready yet. The rates are not low enough. Right now, people are all coming back and they're I want to buy, I'm ready to buy now. So I see a lot of activities for that. I see also activities in terms of new build. People are looking for new build.
Yes.
In terms of let's say for finance, people often they're not ready at the moment, but they know they'll be ready in let's say 6 months, 1 year or more. So they go towards a new build. It gives them the chance to basically set all their finance in order, and then have basically a house that's reserved for them. And then in 1 year when it's closed the new build, everything will be in order. And that's where the broker can come in. We get a pre-approval, and then when when they're going to be ready for purchase, like 4 months before, we're going to go with the best rate at that point.
Ah, beautiful. Now, you mentioned a couple of things that I'd love to get into, especially with a mortgage broker. One is when it comes to new builds. I know that there are a lot of people, a lot of buyers. Obviously, we've covered in the past what are the benefits of a new build versus what we call a resale. But when it comes to mortgages, like, I could definitely see the risk in terms of like new builds when you get into a new build, right? Like for me, it's like you're going to get into a new build, and the problem that you're going to have is that you can't you can't foresee the future. So, so much can go the right way, but so much can go the wrong way, right? So I'm just wondering, like, what are the things that buyers should be aware of? Because I think that's what we're all mostly interested in. Obviously, things if things go well, that's great. But if things don't go the way we need it to go, we want to make sure that we make the risk less, right? We eliminate the risk as much as we can. Of course, there's like no crystal ball. So I'm just wondering, like, what would that be? Like, what are the risks that you foresee of someone getting into a new build? Like, what is it that they should be looking out for or prepare for, at least?
Yeah, so for new build, like basically, you're looking at like making a bigger down payment. The builder wants a deposit. Often that deposit will be higher than the minimum down payment. So the buyer needs to have that money. They will be able to extract it at the time of purchase, like when they close the property. But at the moment they sign the contract, they need to have that money. The other thing with new build is the extra cost to set up the property, like in terms of like AC, if you want to finish the basement.
Right.
The other thing is all the upgrades. Like
that's right.
Upgrades.
I love that you mentioned that. Thank you very much, because a lot of people are confused when it comes to new builds. Like the base price that the builder talks about, a lot of the times is like not going to be your purchase price, right? So, yeah, that's true. So you have to take into consideration, or they have to take into consideration that, you have to look into the upgrades and all these other nuances that come with new build.
Definitely. Yeah. Like often, like people, let's say I'll approve them for 800.
Yeah.
So they buy like a new build at 790. And then later on, like I do the pre-approval, everything is good. And then when it's like, let's say 2 months before closing to like finalize everything, I get the final statement of adjustment, and then it's like 850. Well, if it's 850, it's because they took all those upgrades. Like they went with nicer flooring, they removed the carpet, they did like the basement. At that point, you need to have talked to your broker before that point, because then it's gonna all like change. It's changed the financial situation. It's more money. So it's extra cost that you need to consider.
For sure, because the calculation changes all around, and now you don't qualify suddenly. And that would be the worst thing you do for yourself, which is like you went ahead shopping without realizing that there is a credit limit. And now you have to pay for all of those things because the bank's not going to give you that money. So that's a really good point. I think that what people should do is once they choose the upgrades, because I think what happens is with the builders, you go in there, you select your upgrades, blah, blah, blah. And then what happens is you can then say, okay, this is going to be the extra amount that your upgrades are going to be for. And what you can do is just make sure, talk to whoever that representative is at the design center and just say, hey, you know what, give me about a day. I just want to run it by my mortgage broker to make sure that it's good and it's clear. Now, a lot of the smart builders, what they do, because they don't want this to happen, because for them it's also not good, right? Like, I mean, here we are, we sold you on all these upgrades, but you can't close. So yes, they'll take the property back and they'll hold on to the deposit. All of that is great, but in a market that maybe will be slow, we don't know. We'll talk about that. But in a market like that, you don't want to have another property, like an inventory, to now get rid of. So what some of the smart builders do is that they make sure that, they say to the buyer, hey, you know what, if you do pay for this cash, then we will not include the HSD or something like that. We'll give you a discount for your HSD, which is really cool. I've seen that in the past, and that's awesome. Okay, that's good. Now, in terms of rates. Oh, another thing I want to say about new builds, you also mentioned, because I know we do a lot of files about that. What about the calculation for taxes, property taxes? Because the property's not been, hasn't been assessed yet, right, by the municipality. So how does that work exactly?
Yeah, so basically, when you do a pre-approval, it's all about the percentage that the property will cost you. So people, let's say I do a pre-approval, I go with standard municipal taxes. When you buy a new build, what they do, the lender, they calculate 1% of the purchase price. So that's much higher than what is the
a lot higher. Yeah.
Exactly. So it's reduced the purchasing power. So it's very important when you talk with your mortgage broker to mention that it's going to be a new bill, because it's going to impact the amount. And then if it's not calculated properly, then you're going to arrive at closing and you need to put more down payment down. So
yeah, that's good. That's good to know. Now, another thing I've always been asked, and I think it's definitely worth mentioning here, is closing expenses, right? So a lot of people, they're like, okay, what do I need if I'm a buyer? I'm first time home buyer, or maybe it's been a while since I purchased, and I want to know what is it, and I'm purchasing for myself. So we'll talk about as a purchaser for myself as well as an investor. So what are the requirements for me as a purchaser to take into consideration when I'm purchasing a home? What are my expenses that I need to have ahead of time? Okay.
Yeah, so for basically the closing costs, what you need, first of all, you need your down payment. Mm-hmm. The down payment, you don't need to have it months in advance. If you have it up to 3 weeks before closing, that's okay. So that's one thing to know. The other thing is the lawyer fees. So the lawyer fees, you're looking around $2,000 to $2,500. That's including all their fees.
Right.
The other thing is the land transfer tax. The land transfer tax, if you're a first-time home buyer, you get a $4,000 credit. Mm-hmm. And the advantage of that credit is you don't need to apply for it. A lot of stuff, you need to apply for it. That $4,000 is done at the lawyer stage. So you just got your lawyer, they're going to give you the $4,000 credit.
Okay.
Okay, and then the last thing, if you're putting less than 20%, you're looking at the federal tax on that insurance premium. And then this is around, I would say, between $1,000 and $2,000. So if we want to basically give an idea of how much it costs in terms of closing costs, you're looking around 1.5% of the closing cost of the purchase price.
Now, question, it's interesting because that's something that the federal tax, that's only if it is an insured mortgage?
Yeah, exactly.
Got you. Okay.
So if you don't do if you put 20% or more, you're not going to have to deal with that.
Okay, good. Now, it's good that you say 1.5%, because I think what I keep hearing from people is 2%. I've even heard mortgage brokers sometimes say 3%, which is great. Guys, listen, when we say 2-3%, realistically it comes to what you said, which is 1.5%. But if we are really like wanting to play it safe, make sure there's absolutely no surprises, maybe your hot water tank needs to be changed on the day that you moved in. That's when we say 2% and 3%. But realistically, you're absolutely right. It's about 1.5%. Okay, very good.
Yeah, I would say like it's exactly what you said. Like in terms of like when you purchase a property, you always want to have like extra money. Like in terms of new build, it's to do like the curtain, AC, and all of those things. And if you have like basically an existing property, it's the extra money to, if anything, like breaks down. So
Okay, nice. Now, you did talk about down payment. Let's go back a little bit about down payment. So 2 questions there. Again, I'm purchasing for myself. How is the calculation for a down payment? Number 1. Let's go first with that.
Okay, so for the down payment, basically, you want to have a minimum of 5% for properties 0 to 500. And then if it's more than 500,000, the portion over it is 10%.
Okay.
So let's say you're looking at 700,000, 0 to 500 is 25,000, and then the 200 over is 10%. So it's 20,000, so total 45,000.
Okay, very good. That's another thing. So like a lot of people don't understand the calculation behind it because they think, okay, so it's like 700,000. Now I need 10% of 700,000, which is $70,000. It's not true, y'all. It's basically 5% the first 0 to 500, and then from 500 to, I believe now it's what, 1.2?
It's like it's 1.5 now.
1.5, sorry, yes.
Yeah. So they change it like to help people like purchase,
especially in like places like Toronto.
Yeah, right? Exactly. So they changed like the insured mortgage. Now it can go up to 1.5 million. The other thing that they did to help like first-time home buyer, you can go to 30 years amortization. So instead of like only 25 years, now you can go to 30 years. And that's increased your buying power like a good amount.
Honestly, that is the best thing they did. Of course, there's a lot of other things they could do, but I think to just relieve that pressure off of people, right? Do you agree?
Yeah, I agree. Like the 30 years, like it's a huge difference. And it helps you afford more. And the other advantage basically that it does, it's lowering your payment. So if you're going with the same purchasing power, your mortgage payment is lower. And then when you pay your mortgage, basically you have the option to, if you want to pay it faster, you can do lump sum payment, and you can also do like increased payment every month. So it's like 2 things that the 30 years allows you to purchase a nicer home. And then if you want to pay it faster, you have the option to pay it faster.
Okay, very good. Okay, so now my next question with regards to the down payment is the deposit. As you know, when you purchase a home, you need to not only as part of the offer that we prepare for you, we need to know obviously the price, which day you want to get the key, which we also call it the closing day or the completion date of the transaction. But also with that, there is a deposit, right? So a lot of people ask me, oh my gosh, like they get surprised about the deposit, right? And they don't understand the mechanism, like where does this deposit go after they end up purchasing the property, right? So can you explain to people like, okay, so usually in Toronto, it's about 5% of the asking that people put as a deposit. That's how it's been done, just to show good faith because the prices are so high. They want to make sure that the buyer actually has the money to purchase those properties. So when it comes to Ottawa, though, like we see, you know, deposits range from 10,000 and up, right? So that's now the trend. Like $10,000 is pretty much the minimal. We tried less and it didn't work. Where does that 10,000 go in terms of your purchase? Can you?
Okay. Yeah. So that? Like basically the 10,000 will go in an interest account. So it'll be like basically kept in an account that like secure. So like it's not going to disappear. It's going to be right there. The lawyer, what he will do, it's when they get the mortgage documents with the down payment, basically at that point they'll deduct the deposit from your down payment and from your cost to cause the property. So that, like, basically that deposit, it's like an advance to your cost to close the property.
Okay, so it does go towards your down payment. That's the most important thing. Okay, very good. All right. Okay, so I want to also, like, this is some of the basic stuff that I think it's important for buyers that are out there looking. But also let's talk about now investors. So investors, if I am now purchasing my secondary home, what is the down payment?
So basically, if you're looking at owner occupied, let's say you're going to rent the first property and then you're going to go live in the new one, you're looking at still the 5% and like the 10% over 500. Okay, so that's one thing that people are surprised often. They're like, oh, I'm going to buy a second property, I need to put 20%. No, not necessarily. If you go live in that second property, then you can still put minimum down payment. That means you can buy several properties with minimal down payment.
Ah, very good.
If that second you're gonna rent it, at that point you need a 20% minimum to purchase it.
You mean to say if right at the front, like you're never gonna live in it, you need 20%.
Yeah, exactly.
However, if let's say you're purchasing to move into yourself and then maybe in the future turn it into an investment property, then you can put minimal down payment.
Exactly.
Is what it is. And I think that definitely deserves a something. I think for a lot of people they don't realize that. I think it's a really, really good point. And I want to make sure that obviously we say that about that one. That was a golden nugget right there. Okay, perfect. So as an investor, if I am now purchasing, now investors, some of them they're less picky, right? Because a lot of the times they're not moving into it themselves. They understand that they're purchasing it as a way to invest in the in real estate. So a couple of things I want to ask you. One is, what if the property requires some work? Is there a way, or even like as a first-time home buyer, I guess, or just a regular buyer, you're just purchasing for yourself. Like, a lot of the times we see like, carpets. By the way, I don't understand why there's a lot of carpets like in Canada. I really don't, because as you know, I'm an immigrant, and like, when I came to Canada and I saw carpets everywhere, I thought it was so backwards. Like, it's so hard to clean the carpet. Anyways, just don't like carpets myself. Especially if you have pets. Everybody's got pets. So not everybody, but the majority do here in North America.
Yeah, and I would say like it's more valuable a property with like art flooring. So like, it's like it's a premium to put like hardwood or like any type of other flooring. It's a good value. It's a good investment.
Absolutely. And like the crazy part is builders still put in carpet as their basic package, knowing very well. I think they do it as a way to like bring down the price. And then obviously nobody wants carpet. So they're like, oh, okay, now we're going to charge you 4 times the price for hardwood flooring. Okay, anyways, that aside, let's talk about, so how can somebody go about, like, they don't like the carpet, but everything is like fabulous. They want to do some work to the home. Is there any kind of financing available for people to like would have access to?
Yeah, so basically there's a product called Purchase Plus Improvement.
Mm-hmm.
So like basically what you need to do, you're looking at a property. This is like, let's say it's your perfect home. It's just you don't like the flooring, or you don't like the bathrooms, you don't like the kitchen. Yeah. Whichever you don't like, something that's like valuable for the home. At that point, what you can do is just to get the quote. So you get the quote from a licensed contractor. Mm-hmm. And then me as a mortgage broker, when I submit it, I'll submit the financing for the purchase price mm-hmm. plus that improvement. Okay. And then what happened at closing? At closing, they're going to release part of the money. Then you're going to do your renovation. You're going to do like the flooring, and do the kitchen or the bathroom. Mm-hmm. At that point, when it's done, you're going to send picture to your lawyer the lawyer will talk with the lender, and the money will be released. So all your fees to improve the property will be included in your mortgage, and like the money that you have to put up front to do those renovation, you're gonna get it back. So it's a very nice way, instead of like doing renovation on a credit cards or line of credit, where let's say a line of credit right now it's like around 5.7%.
If you're lucky.
Yeah.
Yeah.
Now you can do like all your renovation. It's gonna be paid over 25 years or 30 years. And then the interest rate is going to be, let's say, 3.99%. So it's going to be much more favorable. And then you get a property that's much better for you. That's like exactly what you want.
So just to go back, sorry, is it that the bank will pay, let's say I got the contractor, they'll pay the contractor for you, or you still have to pay it up front?
You have to pay up front. And then once like all the renovation, you pay for it, then they're going to reimburse you the money.
Okay. So they will give you the money.
Yeah.
Okay.
So like, it's basically you need to find a way to like pay for the work, and then after you're going to get the money back.
Okay. And the money can be blended into your mortgage too if you wish to do it that way.
Yeah, exactly. The purchase plus improvement mortgage, that's what it is. Basically, your renovation will be included. It's need to be renovation that gives value to the home. So we're not talking about like appliances or like painting. It's really things like, let's say, electrical, plumbing, flooring,
like
bathroom.
Upgrades.
Yeah,
like
really
real,
upgrade. That's like, you as a realtor know that those things are very valuable in terms of
Absolutely. Like we can talk about which rooms give you the highest ROI. That could definitely be a segment. That's great. Okay, so, I mean, it's good, it's great, but it's not amazing, to be honest with you. Like, it's still very favorable to the bank because here you are. So I would say I would definitely not recommend that if people have the money to not do that, because, and you know.
Well, the other thing I could mention, like, because you say like, okay, like it's not the best thing, but one other thing, like sometimes people will say like, oh, I'm handyman, I can do my work myself. So the lender won't pay you to do your own work on your house. But what they'll do, they'll cover the material. So you could basically like do your improvement yourself, buy the material, and then just provide like those like bill for the material, and they reimburse you the material. So that's like a good, like that's an in-between basically.
Yeah, but the thing, what I'm saying here though, the problem with this whole thing is that you're going to end up like paying interest on like, you know, first of all, you had to come up with the money up front. And then on top of that, sure, you get the money back. But like, even if you do get the money back, which is great, you'll pay your whoever it was that you found that rich uncle that gave you the money. But at the same time, you're going to end up paying for it for like the duration of your mortgage, which is kind of crazy. So
well, you can always do the lump sum payment. So the lump sum payment, you can do like depending on which lender you're using, it's between 15 and 20%. So you can do those lump sum payment every year, which goes to your principal. The other thing is to increase your payment. So like I always recommend people like round your number. So let's say your mortgage is, let's say 2556. Well, make it 2600, 2700. Just increase a little bit your payment, and then it's going all to the principal, and it's making your amortization go like much quicker. So like over the period, let's say it's 30 years, maybe you're gonna drop at 25, 22. So it's a quick way to pay less interest. So it's an option you have at that point.
Okay. Let's go back to mortgage brokers. A lot of people are confused. What is your role exactly as a mortgage broker? Why shouldn't I go to the bank instead of like working with you? Like I'll just go to my whatever bank. It could be one of the top 5-6 banks there is now in Canada. Like why would I go with you?
Yeah, so like basically,
what's the difference?
Exactly. So the difference between me and the bank. So when you're going at the bank, the first thing is you're dealing with a bank employee. So they're not licensed, they're not mortgage professional, they're just like employee for the bank, and they were assigned to do mortgages.
Yeah.
So often when I get clients from the bank, they're like, oh, the bank told me this and it's all wrong. It's because they're not licensed and they're just bank employee. You have no recourse. With a mortgage broker, you have someone that basically did educational requirements. So they had to acquire certain skill. They're licensed, so you're protected. Like there's a board regulating them. So if there's anything, if they don't do their work properly, there's going to be consequences for them.
Yeah.
So
you're regulated, right?
Yeah, exactly.
Yeah?
We're regulated. The second difference with the bank is the bank will only sell you their rate and product. So often the banks are limited. They have like certain guideline and they won't go away from those guidelines. So like everybody's situation is different. So with me, I have access to over 50 lender. So I can find the best product, the best lender for your situation. And this is very valuable like when we're looking at, let's say, like self-employed people or people with like they have like less down payment, so they have to find a way to make it work, or like let's say your credit is not perfect. All of those you need like a lender that will understand your situation and that will be willing to lend you the money. So with a mortgage broker, they'll offer you that option. The other thing is with the different lenders, the banks are really strict with the ratio, like how much debt can you take. But as a broker, I have access to alternative lender. Those alternative lender, they have like extended ratio. So if you want to purchase a more expensive home, they will do the lending for this. And then lastly, I have like also private lender. Those I never recommend. Those are more like basically you have no other option, then you can go private. Or private is good also for people like you're talking about investors.
Yeah.
Private are good for new like building a property. So let's say you have a land, you want to develop it. There's private lender that will facilitate that. Some of them even like you have no payment for the duration of the 1 year period. So during the construction, you withdraw the money to build your house and then you just have to pay the interest on it. So it's much easier to do the construction.
Okay.
And then the last thing for broker is the availability. So like when you deal with the bank, well, they have the appointment for like investment, they have the appointment with their colleague, like they're always busy. With a broker, they're there to serve you. So they have much more availability. They can, like, let's say you need to talk to them like in the evening, weekend, depending on who it is, they will help you. They'll do the calculation and they'll be like responsive right away. So I would say like those are the main point when it comes to a broker.
Okay, nice. I don't know if you guys noticed, Marc talks super, super fast. And, but you know, there's a lot of valuable information there. And I really, really want to say thank you so much for coming here and sharing. I mean, like we can talk many different segments and we're going to have you here again because there's going to be more questions to ask. I think we just wanted to kind of give everybody an overview of how it is to get your mortgage, you know. But before I let you go, I want to ask you like something like personal, like what does Marc love to do outside of mortgage? Like what are your hobbies? And by the way, Marc, what's nice with you is that you're also bilingual, right? So in Ottawa, we have about, I would say 40% are francophone. So it's perfect because you get to talk to them and, you know, understand their situation. Plus, we are bordering Quebec, and you're very familiar with the Quebec side. Can you help people on the Quebec side, by the way?
Yeah, so basically for the Quebec side, what I do, I help like build the file, and then I have an associate that will submit the file for me. So So I love, first of all, the availability part of you. Like, I mean, what are your hours like? When do people talk to you? When do your clients usually get in touch with you? What is it like? So for me, I talk like every time of the day. So I'll talk like in the morning, like evening, I talk like at 12 at night and even weekend. So whenever There's a question, I'm always available.
Wow.
I want to help client find the best deal. And often, like, let's say you go showing, like you have like showing on the weekend. So you need to have an answer right away. If you want to make an offer, like the market is getting warmer now. So there's competitive offer. So at that point, you don't want to like basically the bank will open and then wait until like Monday or Tuesday to have an answer. With a broker right away, you call me. I'll make the calculation. Is it possible? It's not possible. Get you the approval, and you'll be able to get the property you want.
Okay, so I think that the most important thing is if somebody is looking to get into the marketplace, first off, I always say get in touch with us, because we can get you connected with people like yourself. And something that's really important to us, as I'm sure you know, is that the people that we work with, we're in full alignment, meaning that it's not just because like we just chose somebody out of the blue. It's, people that work like us, wanting to do the best for clients. And I got to tell you, a lot of the times, it's something that I always tell our clients about you, is that, listen, don't be afraid to talk to Marc, because at worst, if he thinks that it's better for you, and there have been cases where people needed exceptions and things like that, you told them, listen, the best option for you is to go to the bank and talk to the bank. But I would say definitely get in touch with us. We'll get you in touch with people like Marc Andre here, who will make sure that your file is looked upon quickly and accurately. And that's what I love, because you really, really, at the end of the day, you really care about the clients. And like with the work that you do, I don't know when you have time for your family, so we really appreciate that a lot. Okay, so as speaking of that, who's Marc Andre outside of mortgage broker? Like, what are your hobbies? What are you into? It looks like you like to work.
So I love ultra running. So I do those like basically long races, like over like 50K. So right now, like I basically do those 160-kilometer race, and looking to go even like longer. So that's what I do during summer, and winter I do the skiing. So I love skiing, and like this is something, the outdoor, I love to be outdoors.
Okay, very outdoorsy.
Yeah.
Okay.
Just one last thing I wanted to mention. Like often, like people will ask me, is there any fees to what you're doing? Like you help me like find the best deal. Like, is it like, what do I have to pay you? And the fee, there's nothing to pay me. Like basically, like the lender, the bank will pay me a commission, but for your cost, for the borrower, there's no cost. So it's something that basically always reach out to a broker. They'll help you, and then you don't have to pay anything. So it's something, there's nothing free like in Canada. So if you can get a service for free, I think you need to enjoy it and profit from it.
I think that if you are finding the right people, first off, they are worth every penny. Okay. That's a difference between, this is what I find, between successful people and people that are not getting what it is they were hoping to get. Because like you try to be like cheap, and then of course you're not going to get the best people in the business. You're going to get a bunch of newbies, and you're not going to get the result that you want. And that result will directly influence what ends up being in your pocket at the end of the day. Or worse, sometimes like they misguide you, right? So many times I've saved people from getting into tenantship, because they're like, oh, you know what, the market's going to crash. Let's just sell my home and go into tenantship, and then we'll get into purchasing homes. And I'm like, no. If you ever do that, you'll never become a homeowner ever again. Let's just find something that works for you. And I really did have to take a long time to talk to them and get them into that mindset. And you do that as well. And that's what I love about like mortgage brokers, because we work very much alike, right? Like, I mean, you work weird hours, we work weird hours. And the beautiful thing is like the exact opposite, like, how you talked about the banks. For us, it's like working with, if you just walk into a new build's office, like the new build's office, that person there is an employee of that builder, and all they can share with you is the product that that builder is offering you. And they're not there to protect you. Nope. They're there to protect the builder. So they'll make you sign documents, things that you've never seen before, while you could have had an agent there with you to make sure that you're protected. And guess what? You don't have to pay the agent anything extra. Now, there are cases where maybe you do because there is no representation fees, and your agent will tell you about it. But it doesn't matter what those fees are. And I think the same thing with you when it comes to like private lending. But those are very, very like special cases, and they are not very frequent. And truthfully, like they're really, really, like if you are going to get the representation, believe me, that representation is worth everything, because that person will help you make the right decision in the path that they have been through many, many times. It's not the first time we're purchasing a home or selling a home. We've done it many times. We know and we can anticipate. I always tell people, anticipate, don't react. Anticipate what can come. So we'll make sure that you don't hit that whatever obstacle that is going to come in the way, whether it be on the approval side, whether it be in the, making sure that, things happen in a timely manner, right?
Yeah, for me, I always say, like, you need to have the best person for you. You need to have the best realtor. It's key into real estate. Like, real estate, the profit is made on purchase.
That's
so
right.
If you overpay for the property, first of all, you're losing money. And then second part for me is like, if the client overpay for the property, and then the lender, they do their own appraisal. They have like automatic system where they do it. But if they, during the appraisal, what they did, they find the value is like overpriced, then you might have to pay more money down. You might have to increase your down payment, and then it's going to put you in a very bad situation.
That's right.
You always need to have the best agent, the best negotiator, to like basically buy you the best property at the best price, and sell your property at the best price. So, and it's what Anna mentioned, like you pay, you get what you pay for. Like if you're just like looking to save like a few dollars, well, at that point, like you might be in a bad situation later on. You want to have the best representation for you. Even for those new build, you want someone there with you to help you find the best deal. And for me, like let's say for my brokerage, we do hundreds of millions of deal every year. So what it does, it's
I think you do like billions of dollars. your brokerage in particular,
so we're like basically like a small team, but very high performing, all about client servicing. So basically, we service the client the best way for their situation, and also because we help so many people get their mortgages. We have like good agreement with the lender, so the lender will help us like make the deal happen because they know that we basically bring quality deal to them. Okay.
Very nice. Yeah, I mean, like again, like we could be talking about this all day long, and I think that it's important for people out there that are trying to get themselves in the marketplace or selling a property. They need to have the proper tools and the proper people that will give them the proper advice. And I'll tell you, like before I got into this industry, it was really, really hard to get straight up answer from, unfortunately, a lot of the professionals in the industry. And one of the things that we like to do is we like to educate alongside. So you understand why we're doing what we're doing, or why we're saying what we're saying, because we want to make sure that everything's transparent. You understand the whole big picture, whether you want to get a whole big picture or you want to go focus and you want to have somebody with you, step by step, whatever your case may be, we help you out. So Anyways, thank you so much. I can honestly go on and on about this, and we'll have you here again. Unfortunately, today was a bit of a short segment. I guess not so short now, but really appreciate you. Thank you guys so much for coming.
Just one more thing. Yeah. Just one more thing in terms of basically education and all of that.
Yeah.
So the good thing with a broker, they know basically how to get mortgage financing. So even though, let's say at this point you don't qualify, they'll do an evaluation, they'll see what you qualify for. But let's say you want more money or you have specific goal. I'll give you exactly what you need to do to accomplish your goal. Do you need to increase your income? Do you need to increase your down payment? If you need to improve your credit, I can help you improve your credit. So whatever is the situation, I'll find a way to increase your buying power and obtain your goal. So that's one thing as well, in terms of education. I always educate the client to get get them the knowledge to them. So
I honestly think that no matter where you are, maybe you're not in Ottawa or Ontario, Canada, maybe even, but I think that doesn't matter which service you're obtaining. If the person is educating you, they're the right people. You got to stick to them. If they're just you have no idea why things are happening, you're confused, then those are the people that I'd stay away from. And I also have a way in which where we filter vendors that we work with as well. So I like vendors who are there that they are willing to go above and beyond for our clients. And they are not here to get you there into some kind of a contract where you can't get out. They're literally taking you as hostage. And I'm not talking about vendors like yourself, but vendors in terms of technology. Sometimes we use a lot of different technology and they're yeah, you know what, you have to sign a year contract, or whether it's technology or marketing or what have you. If you are and you want to work with us and you come to me and say, hey, you know what, you're stuck to this contract for this period of time and there's no way for you to get out, and you're not going to give me any kind of performance guarantee, then at that point there, I know that that's not a vendor I want to work with. And to that same topic, when we have sellers come to us and say, hey, so how long is this listing contract? I open it up to them. I say, listen, you know what? This is a contract. As long as you're happy and I'm happy, we're in it together. And I came here as a friend. I want to make sure when I leave, I'm still your friend. So if anytime that changes, that dynamic changes between the two of us, it's like a relationship. We have the right to say to each other, hey, you know what? It's breakup time, right? So that's legit how I look at it. And that's what I love about vendors like yourself, because that's what you do for our clients to make sure that, first of all, they're educated, but also we're not here to, hold anybody hostage. We're here to help you. And in that way, yes, we do get paid. It's not for free, but for the most part, we don't get paid from you. If we do, know that we have done a lot more. We have saved you a lot more. For sellers, the numbers don't lie. We end up getting them a lot more money than that they actually paid us, right? So it's not a loss. It's actually an investment. When you have the right people by your side, it's an investment. You have invested in yourself, in your assets, and basically you're just gonna have a better outcome, in my opinion. No?
Yeah, I agree 100% with you. You need to have the right people.
Yeah, 100%. Well, thank you so much, Marc. The reason why I was speeding this up, because I know you gotta go, but you had a lot to share, so I really, really appreciate that. Thank you so much for coming on here.
Thank you so much for inviting.
Yes, and we'll have you again here soon. Thank you.
Thank you.
Thank you, guys. See you next time. See you next week.